Hey everybody, this is Jeff Gibby. Welcome to the webinar room. I want to say thanks for coming today. I hope you're having a good day, and we have a very special guest today, one of my favorites, and I'll just say that flat out. You know, it's bad business to pick favorites, but if I had to, well, I'm not going to. Anyway, let's go ahead and read the legal disclaimer. Well, I don't have that slide. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. Trading, the techniques, tools, and methods shown today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall accept no liability for any investment decisions used by investors, et cetera, et cetera, et cetera. Trade at your own risk, in other words. Sorry I didn't actually have the full slide. Did a pretty good job remembering most of it. I should remember the whole thing. I wake up remembering that thing. In any case, we'll jump straight to the guest today. Price Headley is somebody that I really like his attitude when it comes to trading. You know, he starts off with a methodology that, you know, there's so many options available for stocks. There's like 4,500 optionable stocks according to MetaStock right now. And the work that he's done over the years has been kind of designed to find the best opportunities that are out there and the best opportunities that exist in the marketplace. And I really like that as a starting point from a mentality. You know, when I met him, he was participating in a contest called Timer Digest contest, and with that, if you're not familiar with that, it's basically, and this was probably a decade ago. Price and I go way back, but you basically send all your trades in terms of what you think the market's going to do and they keep track of them and they see how good you are. And he won that contest many times, and he's a great speaker, and that's pretty much what I have to say about Price as an introduction. He wrote a book called Big Trends in Trading, I believe is what it was called. It's a great book. You should add it to your library if you haven't. And with that being said, Price, let's go ahead and bring you on here.
Well, thank you, Jeff, for that kind introduction. Always great to be with you.
With that introduction, do you have anything to say for yourself?
Hopefully the presentation will speak for itself. I'm glad to be with you all, and it's always about finding the big bull trends and the big bear trends in any market. Obviously, we've had a very bullish market here recently, but we're going to talk about, you know, kind of how the main names shape up and share with folks some of the new things that we've added into our BigTrends Toolkit for MetaStock. So I'm really excited to intro that never before seen material here. Let me go ahead and share my screen as Jeff handed that over to me. And make sure you can hear me okay. Let me know where you're logging in from. I'm in Lexington, Kentucky. I always love that trading, as long as you've got a good internet connection, you can do it from pretty much anywhere with your MetaStock software in hand. Just type it in the chat box. That lets me know that indeed you can hear me okay. I love to get you interactive here. And you know, as we do get going here, just a reminder that everything I'm going to share with you today is for your information and education only. Nothing that we're talking about here should be considered a specific recommendation or buy or sell any particular investment. And thanks for Joe and others for confirming that we're coming in loud and clear. Ultimately, you know, of course, that you are solely responsible for your investment decisions. That's why tools like MetaStock are so great to empower you to make better decisions over time. While knowing that every trade involves risk, certainly BigTrends and the staff are not responsible for any trades you choose to make, and not all BigTrends products or services are going to be appropriate for all types of traders and investors. So, and Scott, good to see you from Toronto. I love seeing you up there at the Financial Forum. Bottom line is that you know, we don't provide any personalized financial, tax, or legal advice at BigTrends. So basically, everything we do is research-based, and so I'll share with you some of our research techniques that are available in MetaStock today. Also, taxes matter, so check with your tax advisor before you make any investment that's going to impact your unique tax situation. So, what is your biggest challenge in trading? You know, when you think about it, most people tell me it's like finding more winning trades, getting rid of their losers quicker. How do they hold on to, you know, basically, you know how it is. When you win, you always wish you had more of it. When you lose, you wish you had less of the position, right? The bottom line is, though, there's no place for wishing in trading. You've got to manage the whole process. For me, the biggest issue is information overload. So that if you're getting too much information flow, what do you think your brain does? With too much information, with a lack of clarity, if you don't have the buy and sell signal set up clearly in MetaStock, you're going to basically start second guessing yourself. You're going to start saying, well, that indicator is no longer bullish, but this one still is, so I'll stay with a position. And you start justifying trades. So to me, scans is one of the great keys to get you on an information diet, as it were. And MetaStock's Explorer tool, when you know what you're exploring for, is really, really valuable. So we'll go into that. Now, our BigTrends Toolkit, we're actually now on our third iteration that Jeff and I have worked on here. Jeff actually was invaluable, as he always is to me, in helping us get the BigTrends Toolkit, what we call the BTTK, originally launched. And now I think we're calling it BTT3 as the third version of that BigTrends trading toolkit. But you can see there's not just one technique in here. There's a variety of techniques you can use, but it depends on what type of trader you are, what you're really looking for, and what you're all about in terms of your approach to trading. So, with that understood, the thought here is that let's go ahead and talk about one of those techniques and actually a new way you can visualize this. How many of you have heard of Larry Williams' indicator called the percent R, or the percent range indicator? Just a yes or no, Y or N on the chat box gives me a sense of how many people might be familiar with Larry Williams' technique. Some of you have heard about it. I think you're going to, even if you've heard about it, you're going to see a whole new way to visualize it. And for some of you who haven't heard about it, let me explain what it is first, and then we'll talk about the different way that I like to use it. Now, Larry is a great trader, a friend of mine. He's been a long time, idol of mine. And so, I've been trading for 25 years. He's been trading for probably twice that long. But bottom line is that, Larry developed this percent range indicator to basically just measure from the high to the low over any look back period. Where is the stock right now relative to where it's been in this last, whether you're looking at the last 10 days, 20 days, 30 days or more, or hours, or whatever your time frame is. And the irony is, for me, when I tested this, a lot of people use it like a stochastic or an RSI to measure overbought and oversold. But what I found was that really bullish stuff can happen when something goes quote unquote overbought, and then it goes above that 80th percentile in the top 20% of its reading. So if a stock's between 100 and 110 in its last high to low look back period, and the stock's trading at 109, that'd be the 90th percentile. That most people would say that's way too overbought. Well, if we were fixed at a 110 peak, that would make sense that it couldn't go much higher. But you know what happens with trends? They keep making higher and higher highs, and the percent range actually adapts. And that's what I'm going to show you with the tool that I actually added in the latest iteration of MetaStock Toolkit called BigTrends Bands. They actually show you how that range is adapting and when you're in a trend or when you're in a trading range still. So you're going to really, I think, have your eyes open by that. But the first basic rule, the percent R breakout method, the big trends way, is that once it goes above 80%, I've got to get a close, not just any intraday trade above that bar, that initial overbought bar's high, but a close in a future bar above that initial overbought bar's high when we went above the 80th percentile. So if it hits the 80th percentile or higher and then it just drops back off, you are at the top of the trading range. But if it keeps going, it tells you that really the institutions, who, let's face it, you and I as individuals are not the big fish in the pond. Whether you're trading $10,000 or $10 million, we're all still relatively small fish against the institutional billions and billions of dollars that are trying to move into and move out of different stocks and markets. And so likewise, on the bear side, when something goes oversold in the bottom 20% of its reading, most all of you, when you hear the word oversold, you're trained to think buy. You're trained to think, okay, it's got to be ready to bounce. But actually, if it stays oversold, keeps going down, in this case with a close below that first oversold bar's low, then that tells me that the institutions are dumping it and that you've got a real risk of continued decline. So we're going to talk about how you can see that. Now, the traditional Williams percent R has kind of a unique scale, I'll call it, from a peak of 0 to a low of minus 100. So this is when I was still looking at the original Williams scale. Then I started changing the scale around. But what I'm going to show you is it doesn't matter on the scale. Once you use BigTrends Bands, you don't even need to worry about that scale anymore. But let me just show you some of the basic rules that I created in my testing and said, okay, when we go overbought, like when you see this stock was popping up here into the top 20% of readings here off of that first high, we're actually looking for a close above that, which happens on the very next bar, and that's what we would call the bull confirmation on that first circle there, up around $134 or so for MasterCard. back in the day. Well, what I also noticed in my testing was that if it's a good uptrend, anytime that we get a test back out of that overbought phase here, you can see it just under that minus 20, which is basically the 80th percentile from a 0 to minus 100 scale. When it tests back in here, when I first started doing this, even before I tested, I would get nervous and I would blow those trades out. And what I learned was that actually those are key inflection points. As long as that low holds from May 14th in that example, we don't close below that low, then that's actually a chance to not only tighten your stop, it's also a chance to stick with adding a position. Potentially, if you miss that first leg up, you can get at what I call a low risk entry point. Get another leg up to new highs, and then you see what happens. It comes slamming down. I was actually in there buying into the teeth of that decline late that day back there, early June, in the past, and basically said, okay, even though the next morning it was against me a little bit, it flipped back up, closed back above that low. We were still in business, and it took off over the next week and a half. So the point of this is that this gives you re-entry points within these bull retests. And if you're wrong, say you get on this last bull retest that fails, you see that red arrow is not a short signal, it's just a exit when it closed below the prior day's key retest low in early July. At that point, we're basically stuck waiting. It tries to go overbought again, but it doesn't actually close above that high, and you're saying, okay, stay out of that, and it keeps you out of trouble. Now, what I want to show you is the newest innovation, which is basically these two royal blue lines here. We can make them whatever color you want. Basically, are the 80th percentile, and this is Apple on a daily chart going back to earlier this year to now. And so you got the 80th percentile here on the upper panel. So what that means is that when you're looking back, in this case, we look back on a daily chart about a month and a half, and we're saying, you know what, we're looking back at where Apple's been. Guess what? The 80th percentile line will trail underneath a big uptrend when it's staying in the top 20% of its readings. You can see here, this particular one stays outside of those bands for that basically the first 2 months, February, most of March. And then we get a couple of retests back into that band, which are going to be our retest points. Now, if it violates that, you can see we get a first little exit, then we hop back in, then we get hopped right back out of the trade. We're done there in early April. And you will see, sometimes in retrospect, you'll wish you had held on. But you know what? If you're trading options like I am on these names, and I'll tell you my favorite option strategy for creating a stock substitute in just a little bit, but basically you need to get the stock right first, and you need to catch that next strong phase. You see the next strong phase for Apple happens through this May phase, this big uptrend. And you can see that, you know, of course, we're going to try to avoid things like earnings or things that potentially could cause big gaps. But you're going to notice, like, remember, we had this kind of quick little flush after a buy signal right before the earnings. It flushed right after the earnings. It hit that spike low. That was actually a bull retest. And then the stock actually, that was just before the earnings, and the stock gapped up in early August. And you can see what's Apple been doing recently. It's been setting up for kind of a bear signal, but we haven't been that bearish because it's still above its long-term moving average. So you can see that, you know, right now it tried to go bearish, it flipped back up, and we stayed away from that. You see the support in Apple right now on the 20th percentile, this lower blue line. If I just draw a 20 on that, you can see right now the 20 is sitting there at support about 152. What that means to me is that Apple's in a trading range. 152 support, but I wouldn't buy calls on it. I wouldn't try to trade it up because those are often too slow and too unpredictable. It's these really strong bursts that really start to go. You know, when I launched Big Trends, I did it on the heels of an indicator developed called acceleration bands that some of you may be familiar with of mine that help you see where you get in these kind of parabolic moves. The Big Trends bands do a similar service to you as a trader to say, I only want to trade the moves that are outside of those two blue bands, and I want to avoid that stuff that's stuck in between. So we'll show you a lot of examples here tonight where you can see when you should be trading as a trend trader and when you should be just saying, no thanks, I'll pass. So confirmation is another thought that I want to bring up to you, which is this is actually Apple going back from back in 2015. And just to show you, just other examples on the stock, and that not every example works, but we'll talk about why confirmation is so important. We're also going to talk about this upper tool here, which is called the BigTrend Score. So the BigTrend Score is another new innovation in our third iteration of the BigTrends Toolkit from MetaStock we call it BTT3. And essentially, the BigTrend Score actually incorporates more than just the percent R and BigTrends bands. It incorporates all my favorite indicators. And so when you see that kicking in, not just a breakout in the bands, but you see the band breakout, say, for Apple back here happened right here. You say, okay, some of those are going to work. Some of these other ones here you see are not going to quite get there. But when they all are lining up, Jeff and his team at MetaStock did a fantastic job for me, because I was just saying, just go ahead and plot it, and I want to see if it's in the top, if basically of the 10 indicators that I want to look at, if at least 8 of them are into a yes condition, that they're doing what they're supposed to be doing, then we're really into a super strong trend. You can see for Apple in this phase, when that kicked in, right there about February 10th, you can see, and lasted until about the last couple of days of February, you're catching that big up-channeled move there. Okay, you're taking advantage of basically the best trend on that chart over a couple of weeks. And you can see, likewise, there's nothing that says I should ever short here in the bottom minus 80%, this lower red line on the upper panel. You see, never, even when it's trying to break down earlier in there on that chart, or even when it tries to break down, doesn't really ever break those bands either. But you can see that support's tested, but we're nowhere near a bearish oriented signal for Apple. So it keeps you out of trouble on potentially faulty signals. Now, what'll also, the BigTrend Score will do is it'll keep you out of trouble even on a percent R that might be a little bit too early. So you see percent R breaks out here in April, confirms on the breakout there. You see you got a couple of nice days of lift from about 129 up to about 134 ultimately on that little peak, but it came shooting back down. You would have given back all your profits. And this little green dot shows me that it needed to close above that April 27th brief little phase here where it went green when we got our first cross above to the 80% line. That whole principle of the 80% and kind of top 20% of readings, bottom 20% of readings, goes back to the Pareto principle. This is one that I'm sure a lot of you are familiar with. It's also been called the 80-20 rule, which basically means that 20% of your actions in life are going to drive 80% of your results. In the case of option buying, 20% of your option buying trades are probably going to drive 80% of your profits. In the case of business people, 20% of your clients are probably going to drive 80% of your profits. Likewise, in trading, I bet you 20% of your trades cause you 80% of your problems. That's especially true if you like to do sorry about that. There's so much coming at you here, and so hopefully we're coming back in there. I think I hit the wrong button there briefly. I was just saying that this solves the information overload problem, because basically you start saying, you know what, when you have a situation here where you're looking at too many things, you're going to basically dilute your focus. You're going to get frustrated because your trades aren't working, and then you're going to still be searching for another answer somewhere else. You're going to constantly be rotating and jumping around. How many of you have done this? I'm not going to name names. How many of you say you're constantly jumping around, you don't have like a set system that you're following, you're basically still looking for some answers? So we get a me, we get a yes. You know, maybe some of you have a system you're happy with, and if you do, that's fine. You could certainly always be tweaking it, but almost all of you are saying you're still looking for something that you can count on. And so that's why I said, look, and as one of you mentioned, it's time for a change. So you know, that's why I always say I would always rather trade less signals with a higher confidence than trade too many signals and basically lose my confidence or not have that much confidence. Because you know how it is, if you don't have that much confidence and you get a couple of knocks on your portfolio, a couple of trades that cost you money, without confidence, you start saying, well, that didn't work. Let's throw that out and let's go back to the drawing board. So you really want to say, look, when I'm getting things lining up, like these green bars here that Jeff just did with his team without us even talking about it, I love how instinctively he saw, hey, you get a visual like that where you get, hey, that strong kind of green, that strong kind of red on the downside, you know, you want to be ready to jump on those. That's the kind of strong confidence that I'm really excited to share with folks as we literally are just launching this out to the MetaStock community first, and I know we've got some of our big trenders in here as well. You know, so basically, you know, here's a little bit longer one on Apple. You can see it just kind of goes back into 14, and you can just look at the green bars. That's the main reason I just wanted you to look at this. Sure, sometimes you might go up and then you might come down a little bit, not make that much on that first one. But if you can get off to a good start on a trade, that's half the battle. There's a losing trade coming probably right here as it just flattens out on you in May there. But look at the June takeoff, the big trend in just a matter of 2 or 3 weeks. So a big part of this, you see, there's another really great surge there, that November phase where Apple literally went straight up. I mean, that's about as vertical as you can get. Same thing in February of 15. You can see these moves happening with just some incredible power. And so you see on the top panel, these are our big trend score phases where we're above that 80% or higher level and getting that bullish confirmation saying, hey, we want to be a part of those kind of moves there. That's versus, be careful if it's just like a one brief little bar above there and then it quickly flips down. You get that sustained power, in this case getting up to like 90%. Sometimes they get up to 100%. When everything's clicking, I've got one of those for you in the current market, so I'm going to share with you that I've been doing well with here in recent weeks. And that's what we're looking for, is that kind of confidence across all the big trends indicators. So now what's cool about what MetaStock does is that they don't expect you to just kind of understand this intuitively. Yes, maybe for me, I take it too obviously because I've been doing it for so long. But Jeff and his team said, hey, let's kind of define out what are your really important indicators here. And a couple of them we kind of essentially give sort of a double weight to, because saying, look, I want to get 10. I don't have all 10 that I'm looking at here. Some of these are duplicates, like percent R. I'm giving kind of a double weight to by looking at the current percent R and the 2-day percent R. So I'm kind of essentially looking at that as kind of doubly important. Same way, directional movement, the DMI lines, and the 2-day directional movement. I'm giving those kind of a double weight here because they've been really good to me. And then other tools that I've used that have been good to me, like the commodity channel index. These are not things that I didn't develop all these. Larry Williams developed percent R. Trader named Don Lambert developed CCI commodity channel index back around 1980. Efficiency ratio, Perry Kaufman, I originally saw him speak on the concept of trend efficiency, and I created an indicator that I thought did a pretty good job to show you really efficient trends. I did create acceleration bands, which are kind of a natural jumping off point from Bollinger Bands, but they're very different from Bollinger's. I love what John Bollinger did to measure standard deviation. Acceleration bands also measure the price trend and the volatility. So you're getting kind of a dual look with acceleration bands at the unusual trends outside of there. And we're not showing big trends bands on here because that's basically percent R viewed in a new way. So basically we've already got a double weight on percent R, so the big trends bands are just showing you that. And then the ADX, if it's trending in your direction, that's going to add to your bullishness. A longer term moving average is a filter. Make sure you're not kind of, like I showed you before, fighting a longer term uptrend in Apple when you get a brief little sell signal. So, and Jeff's going to come back in there, John T., and talk to you more about the toolkit and how you can take advantage of it. But let's look at a few more of these. So how about Facebook? A couple months ago, before the earnings report, you saw Facebook giving you that big trends bands initial setup breakout. Remember, the first close outside of that upper big trends band, that going above the 80th percentile, is not the bullish buy signal. The bullish buy signal for percent R and the big trends bands is when we actually close above that prior bars high. So you can see for Facebook, it was happening in there around 158. Okay, so that's our buy point. You can see, look at our green, the big trends trend score, kind of going all in. You can see as it makes this last surge here, which is happening for about a week and a half in front of then, of course, what was that? That was an earnings gap up. And I would have said that basically, here's an important pre-earnings strategy. I don't have any problem trading in front of earnings, but if earnings are coming up after the close today or tomorrow morning, I always tell my big trend students, sell out enough of your position if you're in a winning trade to get back your risk capital and put your risk capital you started with in your pocket. So if you invested $1,000 and now it's at $2,000 on that option trade on Facebook, well then essentially say, look, sell half your contracts, get $1,000 back, and keep the other half and let it roll into the earnings if you want to give it a chance to really pop post earnings. But at least you've gotten your risk capital back in your pocket. See, the biggest part of the trading game, as Warren Buffett would say, the top 3 rules of investing are: number 1, protect capital; number 2, protect capital; and number 3, protect capital. And you must be in that kind of mode to be more risk averse. Even though you're trading options, I'm trading options. I haven't traded them for 27 years now without making sure that I could be in the game for the long haul. So being a little more risk averse in that way will keep you around a lot longer and hopefully for the true long haul. You see, when it does violate, that last little retest, we're getting a knockout there on the big trend score, and you see one brief little period where it tries to buy again. Might have been a little bit less optimistic about that because it's not kind of breaking the new highs. Remember, these breakouts to new highs, you should be excited about those. You shouldn't be worried about or betting against those. A lot of people, are always saying, well, gee, it's rallied too much. I'll wait till it comes back down to where I was looking at it first. If that happens, the trend structure has totally changed, right? You want to take advantage of this while you're in that surge outside of those big trends bands, outside of all these other indicators confirming the process. And if they're not confirming it, get the heck out. As the old Will Rogers quote says, I buy stocks that are going up. If they ain't going up, don't buy them. So it's kind of that same mentality here where you want to catch them in these phases where they really take off, like in Facebook's big surge there in July, right? I mean, that's where the big money was on that particular trend, from this buy area up here to that peak. But you can see, yes, we got a little fake out and then hopped right back out a few days later on that one. You could say, sure, if you took that one too, you get knocked back out a few days later on that one too. But the principle is that give it a chance to run, at least on part of your position. Now you see when we zoom in to say another example with the big trend score on top, that you say, okay, look, going back to a prior example of Facebook giving even though it's already outside of its big trends bands from earlier, remember that's going to be one of my earliest indications of a trend, which is starting to break out back in this area. But you can see my big trend score hitting above that 80th percentile or more is kicking into gear through this big surge phase right there over those 3 or 4 sessions. So, from that perspective, that's the kind of thing you get on one of those, and you can start peeling off some of your profits, letting some more run, and then giving it a chance. And if it doesn't run, you still peel out the rest when you get your buy exit signal, which you can see happens for the big trend score about a week after the top, 4 trading days after the top. So from that perspective, fine. You haven't lost much from where your buy point was on the big trend score, going kind of into that top 20% super strong uptrend mode. So that's important. What about a stock like Alibaba? Alibaba has been another one that has been a big winner this year, and it's kind of like the Chinese Amazon, if you will. And you can see some really nice phases in the trend earlier in this chart here. You can see catch one quick little pop, another quick little pop here. And this is why I would advocate saying, look, taking partial profits is fine. Just give it a chance on the rest to keep running, because when you get those really big runners, those are the ones that can really make your month or make your year. And so, you don't want to feel like you left too much on the table, but if you take part of your profits and then if it does give some back, you're not sweating it so much and just following your system, getting out, coming back to play another day. So you can see the green phases here. And essentially when we're not in a green phase, even though, yes, Alibaba's had a generalized uptrend, you can see long sideways phases where it just kind of consolidates outside of that green phase. So it's not bearish, but it's not bullish either. You're just going basically sideways. You're saying, hey, if I'm just going sideways, I cannot afford to be buying options. That's more of an option seller's market. Or frankly, for me, it's more of a stay away market. So, Alibaba's had a little rally back up here recently with the market, but basically it's not really fitting that criteria on the big trend score in the top 20% of its possible readings. So we say pass. So the bond market, TLT, it's a 20-plus year Treasury bond ETF. And it's been all over the place over the last year and a half, you can see. I mean, it's had a couple of nice uptrend moves. You saw that big surge back in June, July last year. And then you saw that incredible drop, and it happened before the election. So our president can't get the blame for the bond market tank. It was already starting to come off. You can see the big trends bands on the downside were downtrending for most of October, right through that phase. And then, of course, they really went into the super strong downtrend phase right after the election and caught that next big decline for basically the rest of November. So when you look at that and you say, okay, I want to position myself to profit when it's really working for me. Now notice a couple of these that happened in March this year, a couple have little diamonds there, but you don't see a sell point because they're not confirming, they're not following through. So that lack of confirmation keeps me out of a lot of trouble in a lot of different trades. Right now, bonds, interestingly enough, hit one of those kind of key points right at the start of September a month ago, couldn't get through that setup point as a breakout and ended up being the top of the range and came back down. So you're really at these inflection points when you look at these types of trade setups and saying, okay, they're either going to go or they're really not going to go. So you don't want to be like all in and just kind of trying to bet on a breakout before it's actually confirmed. I'd much rather wait for it to confirm, and then I've got a lot more confidence in avoiding a lot of fake outs. Likewise, on the downside, what happened to gold after the election, of course, was very significant. By the way, not every bright red confirmation point here is going to work. You can see this one is going to knock you out for a small loss from the sell point here to the exit about a week and a half later. So we'll talk about this with option strategies because you got to buy the right kind of options. So if you get stuck in a flat market or a slightly against you type of market, you got to have a way to still salvage a good chunk of your options value and go on and play elsewhere. Now notice though, post-election, November 8th, a reaction on November 9th, sell confirmation the very next day on TLT. You see it tests up into the bands. Notice how these royal blue bands act as a resistance. That's that retest we were talking about. That's going to be something that in a good downtrend they should stay underneath the lower BigTrends band there. You can see in this case, as we come out of the BigTrend Score sweet spot for being a seller and saying we don't really see that anymore, should be better off to exit there. If you're using the BigTrends bands, you actually wouldn't get out until it violated the bar that it came back inside of there, which would be a little later. So in this case, the BigTrends Score does maybe a quicker job by saying we're losing some of the underpinnings of why this is a great downtrend. So we're saying go ahead and hop out, and you're a little ahead that way. And again, time is everything, especially with options, right? So, more recent look at gold, of course. There's one of those bearish setups that did not follow through. So we kept ourselves out of trouble there in early July. Didn't take that as a bear signal because everything wasn't coming together. It was just starting to get near that key test point, but not break down any further. And again, even when we do get a buy here on this bull signal in early June, you're out 3 days later with the exit. So as I like to say, it's okay to be wrong. Just acknowledge that you don't want to be wrong for too long. Too many people dig their heels in, get stuck in trades, and then basically get really hurt. And that's what we don't want. We want you to maintain maximum flexibility. Okay, so now going to the current gold market, you can see we had a nice little setup that never confirmed, then another breakout. And then when we finally got going here, we really had a nice 1 week rally on the GLD back there at the start of September, right post the Irma hurricane. And so we kind of had this flight to safety mentality initially, and then of course that's now totally come off, and now everybody's in flight to risk and kind of the melt up scenario for stocks underway. But you can see gold's not really in that great downtrend either, even though it's below the BigTrends bands. BigTrends bands are bearish, but gold's basically telling us that it's just not that bearish on the whole. So the one I promised to talk to you about that actually has been very good to me lately, and it's very ironic because it's not one I would have expected to trade for a long time, is General Motors, GM. Now, GM, this is through today's data here, you can see gave an initial setup there at the start of September. Remember, you had the first Hurricane Harvey in Houston. That spike in late August needed to close above it. It didn't happen. You see it came back down. The green went away, and we wait for another reset point, which then happens here right on 9/11. You can see then the bar after that, we're closing above it. So you can see with that little arrow there pointing out that at the close we're getting a new buy on GM right about 37 3/4, just a little under 38 bucks. Now you see that the BigTrends bands are doing their job of showing you the ratcheting up in support, and this is kind of like that. You've heard that phrase, stocks take the escalator up and then take the elevator down. these big trends bands a lot of times look kind of like an escalator where basically you'll get a surge, then you get this little consolidation, and so while we're not making new highs, percent R is not going any higher, and so the bands are staying stuck, saying that's basically the 80 percentile level. You know, if I was plotting 100%, it'd be ticked off of this high that happened right there in that little spike peak about September the 14th. But, you know, basically what we're saying is, look, a sideways flag type consolidation shouldn't worry you, because essentially you see what happens is it just gives some time for the big trends bands to catch up as support. Then we were off to the races, and at the start of this week I even bought into some short-term GM October 40 strike calls in the October monthlies, and we bought them and we sold them out the next day for over a 50% gain when the stock surged from off of that band to the gap up the next day. Now you see, it's still bullish, but it would be totally natural for this big trends band to be tested at some point. Right now that's about 42 and a quarter, and it's trending up, but the stock's almost $44. I don't want to get caught after I get a nice spike in my favor. I don't want to get caught into a retest. So the thought is, okay, I just went ahead and cashed it in, and now I'll wait for that next retracement as the next chance to buy GM. But it will probably give us another chance to buy. You can see that the green, we're still in that green mode here. This is through today's action. So now this is not a recommendation to buy right here. I'm just saying, for me, I'll use the big trends bands as my more logical support area here. So from this perspective, that's my freshest example of, hey, it doesn't have to be a tech stock or a biotech stock or a health stock to have a big uptrend. It can happen across industrials and all kinds of other sectors. It just, the market rotates, and there's a bull market somewhere. You just have to know how to find it. That's what the big trends bands do for me. And you can see over on the right, it calls out. This one on GM has all 10 as it's all bullish here. So you can see it's giving us that reading at 100%. All 10 out of 10 is 100 percentile. If they're all negative, it'd be minus 100. It's a lower boundary for my BigTrends Score indicator. Again, these are brand new in this latest version of the BigTrends Toolkit for MetaStock. So it does a great job of kind of calling out on the right how this works. You can see that it's suggesting a long signal because of this move into that really super strong, everything lining up at once. Kind of like all rivers flowing into the same bigger river in the same direction are going to be a lot more powerful when you're combined with a lot of other forces. If they're hitting into each other with conflicting signals, some bull, some bear, you get a reading of 0, half of them are bullish, half of them are bearish, well then, you know, that's going to lead to a lot of chop and churn and uncertainty. We're not in for trading that. Now I mentioned, as far as an option strategy that helps you to simplify this whole process, what I recommend for anybody who's getting started in buying options, because a lot of you know probably sell options because you didn't learn how to buy options properly. You bought the too aggressive at the money or out of the money options, and then you got burned because of the loss of time. So when you buy a more in the money option, you get rid of a lot of time value and you put more of the focus of your position on the intrinsic value that you have already with the stock, quote, in the money. Now, if we were going to sell short XYZ shares, say it was trading at $56.60, most people would make the mistake of like buying the 55 puts, hoping it's going to drop down to 50, and they can get a big quick pop if that happens fairly quickly. I tend to advocate kind of going the other direction, go more in the money. If you bought about a month or even 2 months out, 60 strike put, when you buy a 60 strike put, you have to pay $470 in this case. How much is that 60 strike put worth right now intrinsically? You've got a right, a put gives you a right to sell the stock at that fixed price, the strike price of $60. It's trading down there at 56.6, so that means that right away this option is intrinsically worth what? 60 minus 56.6 is $3.40. So that 340 is basically, as a percentage of the 470, that works out to about, I think it was 72% is intrinsic value, and that means that the remainder, in this case about 28%, the $1.30 of time out of that 470 works out to about 28% that's time risk. If nothing happens, it's just dead flat, you lose 28% in your option. Now, if you buy the wrong type of options, you could lose 100% of your option. So what I find is that people that are going for those more aggressive options usually aren't getting enough of a boosting their risk reward ratio. Their risk is too high that they don't get enough reward bang for their buck to make it worth trading those more risky at the money or out of the money options, generally speaking. Now, I personally like to trade them sometimes when we get into a strong trend, because the at the monies can go in the money very quickly when you catch the trend right. You can see, of course, the leverage if the stock does go to 50 before the expiration in December. In this example, the short shares are gaining a little under 12%. The in the money at put options at 50, the 60 put has to be worth 10 against the 470 you paid for it. That means a $530 gross profit before commissions, 112% gross gain. So, that's something to keep in mind. Now, just for a frame of reference, it's interesting to me, I keep some of these old charts. This is going back a ways to 2007. That we're seeing the breakdown of the brokerage stocks well before we had the Great Recession in 2008. And you saw multiple times where this stock would not confirm. So if we had our big trends bands on here, it would show like one bar underneath it, then it wouldn't close any further down. So multiple chances where it would not confirm, we just stayed away. I'm trying to short it. This one came back up and then back down. So each of those reset their potential signal. It took it about 5 or 6 fake outs before we got the true breakout. You see it's starting to break down right here, and then it's going bear confirmed as it follows through to the downside right there. That was July of 07, and then the stock dropped from 130 down to about almost $100. And then the stop out happened when it came back above that bottom 20% readings, and then you saw it close above that high. That's the exit in blue of the bear signal, the rest of the bear signal. Now, Bear Stearns, by the way, as you know, in 2008 collapsed in March of 08, and you can see this one showed you where the percent R was breaking down, but this is my acceleration bands, just you can see. So you can still use acceleration bands and see 2 closes underneath. It was 1 and 2 right here, gave us a sell on Bear Stearns at about $70, $69.94, memory serves me. And basically this is an example where I made a mistake and I took a double on the option real quickly when it went from 70 down to 60, and I thought I could get back in on the next bounce, and there wasn't much of a bounce to be had, and then it went from the low 60s, and when JP Morgan offered $2 a share, it opened down here at $3.50. So from 60 to 3.5, the stock lost more than 90% of its value in just a few more days. That is one that I ended up regretting, because I should have sold half of my position at a double, not all of it. And so, that's the kind of thing you want to give yourself a chance to ride. So I talk about my mistakes too in days past and learn from those as well. Now, another quick concept, since I've got a few more minutes and I'll hand it back over to Jeff, is this concept of efficiency. I mentioned that Perry Kaufman is a great systems tester, and I saw him speak many, many years ago, and he was talking at a conference about trend efficiency. And I thought, well, isn't this an interesting concept, especially for option traders? If you say, which of these trends, a red tech stock trend or say a black utility stock trend, would you rather buy a call? Let's say that they're both starting at 50 and they both go to 60, and I tell you, well, you're not going to predict every squiggle, but you know that the black name has a 20% implied volatility, and the red one has a 40% implied because it moves around a lot more. So it's got twice the volatility in red compared to black. If both of them go from 50 to 60, which one do you think you're going to make more money buying, say, an at-the-money 50 strike call out a couple months, and this move happens, let's say, in a month? Just curious. Type in red if you think it's the more volatile name. Type in black, or if you think it's the less volatile name, or type in question mark if you're not sure which one you would trade. If you're just using the classic options pricing model, and I'm not going to name names, so don't be shy. So question means you're not sure. Okay, that's not a problem. That's why I'm here to help teach you about this. So we get a red, we get a black, we get another black, we get another question mark. So, basically kind of a mix. Now, those that say red, why would you say red? And likewise, those that say black, why would you say black? Just quickly just type in what your thinking is about why you would say one or the other. So those that say red say, well, it's got more volatility, more potential to move in each direction. So that's kind of attractive to people that look for, hey, I'll look for something that really moves around a lot. Distance in the total distance moves, says 1. So yes, there's more total distance moved in red, but the question is, if you're paying twice as much in volatility, that means that for the 50 calls, you're going to pay twice as much for an at-the-money option in red than you are for the half as much volatility in black 50 strike call. You get the same net move from 50 to 60. So actually, if you paid half as much for the black calls, from the beginning to the end of the period, you're going to make twice the return on your investment in black as you will on red. And Charles nails it, has the lowest implied volatility in black. And also, if it goes against you, you don't have much give back. In this case, you see it's got basically no give back. Those little give back phases in red can oftentimes kind of shake your confidence, right, and cause you to blow out a trade maybe a little prematurely. Nobody's ever done that, have they? Say you've got a moving average that's trailing underneath and it gets tagged, and you get worried as it gets tagged there, and you say, okay, I should be out, and you get flushed before it bounces back. So I like trends like the black trend here, which is just really slow, steady, consistent, and directionally powerful. That'd still be a huge directional move in a month, and you're paying half as much volatility. So that's the greater efficiency, because it's getting the same net move, but it takes a lot less total points to get there. So that's back to Carol's point. It's actually beneficial when it takes less distance to get there because the market makers are gauging that stock's historical volatility, and the more it swings around, the more you have to pay for those options. And you don't want to pay up. You want to be able to pay a relatively cheap price and be able to ride that thing as long as you possibly can, and basically have a lot of confidence that that move will work out in your favor with the efficiency and how handily it's doing it. Now, I created then as a result an indicator called the efficiency ratio, kind of based on Perry Kaufman's insights. And my efficiency ratio is a lot like the percent R breakout. Now, the efficiency ratio is in green in the middle panel here. This was silver a while back. You can see silver going into a positive efficiency mode when it starts crossing there, and then it gives a bullish confirmation. So the efficiency confirms what's going on with percent R. You might think that these are just going to overlap each other all the time. They don't. Where does the efficiency break down? Well, interestingly, this is when silver was just going to the moon up near 50 bucks per ounce. And you can see this is a retest here in the efficiency ratio. Here's another retest coming in right here, and yet another retest back under the efficiency threshold right here. The final exit actually happens when we cross this next retest on the dotted line, and that low does not hold. That's when the margin requirements were tightened. And here about 41 bucks silver gave the exit after giving a great move from 30 to 50. So, and you got my acceleration bands in the upper panel, you got the percent R in the lower panel, but again, the big trends bands can really help you to see that too. So anyway, the point of this is that the efficiency will show you opportunity. These are all things that are available in the Big Trends Toolkit. I can only show you so much in our hour or so together, but bottom line is I want to show you a few things. Now, I've been fortunate to appear on Fox News, CNBC, et cetera. I'll be on CNBC World here in about just over an hour, actually. And talking about the market, talking about stocks, talking about what's the next stock to make a move. Well, back in the day, I remember I was going on Fox News, and they're like, give us something that's had a move that's likely to have an even bigger move. And it came up with these two shipping stocks, TBS International and Dry Ships. At the time I traded Dry Ships, I'd never traded TBSI before. And I said, buy TBSI on the show. And they literally all laughed at me on Fox, on one of the Saturday morning business blog shows. They literally like, are you crazy? This stock's already gone up too much here. So that was happening right in this breakout point here as the stock went more than 100% above its 200-day moving average. Now, this is a pretty cool little plot and system because it tells you when that happens, you would think that's just way overbought. There's no way that this thing should go any higher when it's that far above its moving average. But you see, the first leg got off to a nice start from about 20 to 25, settled back to 20, and then kicked back up above here yet again, and that was the home run where the stock practically doubled from about 22 up to about 45. So you see it peaked out right there at about 45. You can see it at some point it got to about 180% of its 200-day. Remember, the 200-day is going to trend up. So this thing has to be getting enough escape velocity out of orbit, if you will, to more than eclipse the rising 200-day. You see then when it pulls back and tests down below there, we call that a retest. That little spike down in August, and that year it was a nice little buy the dip type of an opportunity. But you can see this is an example where I never would have found that if I wasn't using the BigTrends Toolkit and MetaStock with these kind of end-of-day explorations. And frankly, there's nobody who knows more about this stuff than Jeff Gibby. You know, the point here is that, you know, this is the kind of situation where, you know, Jeff can really show you more about kind of what you're missing if you don't have the toolkit, and how you can start really taking advantage of these big trend signals. So from this perspective, you know, I'm going to hand it back over to Jeff so he can walk you through, you know, some more aspects of the toolkit and the new launch of this latest BigTrends bands and BigTrends Score additions in the third version, the BTT3 as we call it, and how you can get started. So Jeff, let me hand it back over to you, and thanks so much for sharing your expertise as well.
Price, that was one of the best segues ever.
It's easy when I know that you're the guru when it comes to toolkits and how to make this stuff really hum for people so they can fit their goals, whether they're a swing trader, a quick trader, swing trader, position trader, or a longer term investor, or a little bit of all that. So the beauty of this, as you mentioned in one of answering somebody's question there, Jeff, about this can apply to all time frames. I mainly focus on the dailies, but basically, as we know, it can apply to intraday charts, it can apply to long-term charts. You can just take the principles and apply them any way you want on any time frame. So, but thank you, Jeff.
Thank you, and thank you for. I think you did a great job. Awesome job. Didn't expect anything less, but I want to thank you for spending about 50 minutes with us. And with that being said, you guys should be able to see my screen. It should say templates. If you're not seeing that, please let me know, because I've been having some issues with my monitor and my display today. But I want to kind of give you an idea of the scope of this BigTrend Toolkit number 3. We've developed the third version of this because it's been so popular, but it's a huge add-on, and maybe even a bit, well, it's big. We'll just say it that way. In it, you're going to get a list of all of these templates. If you're not familiar with like kind of the MetaStock jargon, a template is just something you can apply to a chart that adds the appropriate indicators and tools and all of that kind of stuff for you. In addition to that, you know, there's a number of different indicators that Price has kind of devised and used, and in the case of like percent R, maybe kind of adjusted the scaling to kind of make a little bit more sense. But quite a number of indicators that you can use as well. I call it a toolkit because it is a toolkit. It isn't just like a one system and you're kind of done type of a thing. It's something that you can, as you were saying before, Michelle, combine the indicators and kind of play with them. And a lot of them, the core concepts, I really, really like. You're looking for stuff that's moving efficiently and accelerating into a trend, and really kind of allowing you to step over those littler opportunities to find the ones that are really going to kind of go explosive. And I think Price maybe covered 4 or 5 of the systems. He did a great job of that. There's actually, I think, 19, if I counted correctly, systems that are actually included with MetaStock. Or I'm sorry, these methods. These are the systems that are included in MetaStock. And these are when we call methods, these are actually kind of out-of-the-box methods that are kind of designed to teach you a little bit about the indicators, give you buy and sell indications. And I kind of want to drill into that and just show you a little bit about what that means. Before I do that, I'm just going to make one small change here. If you guys have questions as we go through, we're probably going to go about maybe 5 to 10 minutes over. So I hope that's okay with you. I want to come in here and just kind of just make one small change there, just so we kind of get a little bit less background noise. So when I talk about methods, those are methods that we've built an expert advisor for. Okay, and what I want to kind of show you is kind of how I really liked when we started to kind of develop with Price his scoring methodology. I thought it was a good way for us to go in and kind of rank all of the stocks based on kind of the indicators and the way they were giving kind of the bullish and bearish. So I kind of took the methodology and actually ran with it. So in all of the methodologies, if you'll notice if you're a user of BigTrends, you'll notice that we've kind of updated the look, and we've updated the field quite a bit. It looks a lot more modern. But what we're looking at right now is the BigTrends Score template. So out of all of those methods that I just showed you, we're going to look at one. I just want to give you an idea of what it does. Okay, this is General Motors. I found this today because Price and I were looking at it, to be frank about it. But when I've got this open on a chart, I've got this commentary window over here. This is optional. You can kind of pop it in and pop it out as you see fit. But as soon as you open it up on the chart, anytime that the indicator score comes up above 80, you're going to see kind of this bullish ribbon form on the chart. If it goes down to below minus 80, it's going to start to show you a bearish ribbon on the chart, which you can see real temporarily right here. As part of this template, you're going to get a few notifications. Right now, it's in a long position, which you can see it bought back here on 9/12. The day before, this little triangle indicated that there is a potential buy opportunity and it was waiting for confirmation. It will give you these setup opportunities. Like if you have another setup opportunity but you're in a trade, it'll actually still annotate that on the chart so that you can see that maybe that's a re-entry point. Okay, so these are automatically drawn. And in each of the methods, what we've tried to do is kind of give you an idea of kind of what the system is doing, and more importantly, what you should do with the commentary. So let me open up that window, and I just kind of want to show you exactly how it works. So if I click on the expert commentary here, what it's going to do is it's going to give me a little bit of a triangle that points straight down at the current bar. Okay. So right now we can say, okay, well, the BigTrends Score breakdown, right now it's 100, okay? Kind of gives you a little bit of a breakdown. Since this one is about the BigTrends Score, it actually kind of goes through all of the indicators and gives you kind of a bullish or bearish reading about what they're doing, okay? It also kind of tells you right now it is in a long trade. That doesn't mean buy now. If you wanted to buy now, you'd probably want to wait for kind of a re-entry signal to kind of form on the chart. But if you're looking at it back here, you notice I just moved that triangle back. And so now it's looking at 9/12/2017 when it issued the buy signal. And I just changed my mind. I'm going to go back one day prior to 9/11/2017. Okay? Because this was actually a setup and not the actual trigger that got you into the trade. So on this particular day, the score was 80. And if we scroll down a little bit, you get this breakdown. The BTS indicator has just crossed above the 80, indicating a long buy setup has formed on the current bar. If you're looking to trade this as a setup, you should look for a trigger above the current bar's high of $37.48. So it's saying, okay, right now, all of these indicators that kind of compose the breakdown, the BigTrends Score, the cumulative total has gone above 80, meaning all of them but two are bullish, okay? And the way we're going to confirm, and Price is really big into confirmation, the way that we're going to confirm that this isn't just a temporary thing is we're going to wait for a close above the high tomorrow. Okay, and as it happens, we did close above the high. So on the very next day, basically as soon as it closes above that high, you're going to see that we've currently indicated, okay, the BTS indicator is currently crossed above 80. And the price is broken above the current high. This indicates a potential long signal. Okay. One of the things that I like about this is how specific the Price got in terms of the definitions that he gave. If you're interested in taking advantage of this opportunity, you could buy the stock or the call option. Aggressive traders will typically look at call options, one strike out of the money or near the money that costs 200 or less, while conservative traders will consider the call option with more intrinsic value. And you should look to exit this position when either this happens or this happens. Okay? So it's really kind of helping. It's kind of like having Price to a degree over your shoulder, kind of giving you some advice about how you can structure this trade, how you can kind of limit your losses as you're getting in. It's really, really a cool feature. If we go to the next day, I'm just going to kind of skip it down to kind of what it tells you about the current day. This will, once it kind of has a little bit of a retracement, it hasn't had one yet, but once it has a little bit of a retracement, it's going to form a stop level for you. And when that happens, instead of saying no stop price available yet, wait for the drop in the BigTrends Score value to calculate a stop. As soon as it can calculate a stop based on a retracement, is going to give you that stop value, and you'll be able to kind of put that in with your brokerage. So up until that point, what you want to do is just check in on it every day. Unfortunately, it still hasn't developed that price stop yet. This has been moving up dramatically, and you'll see right now the BigTrend Score is given a perfect score of 100. Everything's bullish. This thing is going into a trend really, really well, and you might even say it's accelerating into a trend. Again, it's not a recommendation to buy. We'll be really, really careful about that. It would have been really, really nice to pick it up on this buy signal. I will say it that way, though. Okay. So that's kind of how the methods work. Basically, the methods allow you to kind of understand exactly what's going on with the actual methodology, give you some basic advice while you're trying to make that decision during the trade about what you should be doing with it, and tell you how to get out of it, how to protect your capital and your profits as it's going up. It's really, really cool. I remember initially when we wrote up the commentaries 10 years ago for the systems, and we've modified them quite a bit, as you can tell. I was just so impressed with how thorough Price and how much thought Price actually put into kind of the commentaries. He totally got exactly kind of how these commentaries could be a helpful tool for you to learn what the indicators are doing, and almost as importantly, how to implement them in a trading methodology. So I've always been impressed with Price's thoroughness. Let's go back into the PowerPoint for a second. In addition to that, so that's kind of the scoring system. That's how the commentary works. In addition, you'll be able to take any of those methods, like the acceleration, the efficiency, the score, the bands, any of the methods that are kind of there. And it is about finding opportunities now. And so what you'll be able to do now is you'll be able to go in and sort if you really like the acceleration band. So you want to be able to find all the long signals for the acceleration band. You can go in and sort for those. You can go in and run a scan against. It doesn't matter. If you want to do all the optionable stocks, that's a list of it that's available for you for all the optionables in North America. If you want to find stocks that are moving efficiently in London or in Australia or wherever it might be, we have the data for that. So you can apply this type of a methodology to stocks or futures or forex or even options. It was designed around options, but you can apply it globally if you don't happen to be in the US. One of the things that we changed, we added the 2 new systems for those of you that use BigTrend Toolkit 1 or 2. But I did like this score concept because I like the idea to kind of gauge the bullishness or bearishness. So even if you're running a scan or an exploration on the acceleration bands, in this case, this is a scan on the acceleration bands, you'll be able to see what the score is without even opening up the chart or applying the indicators. And then maybe you want to take the ones that only have an 80 or higher. It's there for you to play with, but I think it's a tool. Because again, what you want to be able to do is focus on those opportunities that are the biggest and step over the smaller opportunities, as Price likes to say so much. There's a question that came in, so I'm going to answer it. Scott says, I like the option chart system. Oh, thank you. Ananda says, do you have data for futures quoted on the NSE Nifty India? We do. So let me, one of the things that has been a great advantage to us, and by extension our customers, is the data coverage that we actually offer. We've been able to, with our partnership with Reuters, we've been able to grow the brand anywhere. We have a lot of customers in India, Ananda. It's one of our biggest markets. And just to give you an idea without kind of going and looking at all of the exchanges, right now I can, in my MetaStock program, look at 381,847 instruments. So yes, NSE futures and stocks are covered as part of the data that we offer. In addition, Europe and Middle East, North America, South America, all the major futures markets throughout the world, as well as Forex, with probably one of the largest contributor pool that's available on a retail level. So it's a very, with Reuters, they like to brag that they have 95% of the global market cap. It's a huge company. And if you want to trade it, you're likely going to be able to find it in MetaStock. Thanks for the question, Ananda. I think I took a little bit longer to answer it than I needed to, but we do have wonderful data available with MetaStock. So in addition to being able to do the expert advisor, get the buy-sell signals, get the commentary, and do the scans and find out which ones have a buy and sell signal, focus on the opportunities that work, we do have the ability to go in and test these trading ideas. So if you want to see how it works on the Nifty 500 or see what stocks, which methods work best, which indicators work best, you can go in and do a system test. And that'll give you, wow, these are a little bit out of order, but that'll give you a complete report. I have a couple of extra slides in here that are just misordered. It's been a busy day, so but it'll. Here's a bit of a test that I ran against. I believe it was the Dow 30, if I'm not mistaken. But you can see Goldman Sachs worked really well against the BigTrend Score. Gave us a good result over about a year of data. You can test back to 1980 if you want. One of the things that you'll notice with most of the systems, this one's actually a little bit more frequently, but because Price is so selective about the tests that he runs and the trades that he takes and stepping over kind of the smaller opportunities, a lot of the trades will be profitable, but maybe it'll only trade 2 times or 3 times. So scanning will be really, really important with this. The ability to test it and kind of get an idea of how well it works and what stocks it works well with is a very, very good capability as well. And of course, that's going to come with the full system tester report. So how it worked over time, how often you're trading. This equity over time and these equity charts are very, very important to be able to look at. And when you see big flat areas like this on a chart, you know that you're not in a trade. And so that kind of gives you an idea of how efficiently things are moving and how efficiently you're making money as well. So again, it's a massive toolkit. Price and I, over the last, we worked a lot on it, and I really appreciate the time that he's put into it. For me, at this point, BigTrend Toolkit was the first serious project I took on 10 years ago, or 12 years ago, or whatever it was ago, and it's something that I absolutely has been a bit of a labor of love for me. So, but it's also something that has kind of grown through 3 iterations. There's so much of Price's 30 years of experience in it. And I really want to give you the chance to try it out. I have a feeling that it's going to help you in the trading that you're doing, and I have a feeling you're going to like it, probably not as much as me, but quite a lot. And so what normally the BigTrend Toolkit for MetaStock is going to cost $49 per month, or it's a $4.95 a year. Now, if you own MetaStock, or if you own the BigTrend Toolkit 2 or the BigTrend Toolkit 1, what you want to do is we have upgrade pricing that's available, and it's very reasonable. You just want to give us a call. We'll figure out what version that you have and kind of quote you an upgrade price. But if you're brand new to it, basically you can pay $49 a month. And how many trades do you have to find to make up a pretty good rate of return on that, right? $49 a month is nothing, as long as it helps you make money. So what we're going to do as part of the webinar special is if you pay for a month, we're actually going to get 2 months of that for free for you. So for your first 3 months, you're going to pay $50. That's going to give you time to read the extensive manual that we've put together, play with the indicators, play with the methods, make sure that they work well for you. And if you don't like it, well, it's $49, right? That's it. We'll even, if you need a copy of MetaStock, we'll arrange to get you a free trial of MetaStock. We want you to be able to kind of use this tool. If you don't have BigTrend Toolkit in your collection, in your arsenal of trading indicators and tools, I think it's required. You should have it. So to take advantage of that, give us a call, I should say visit us online, www.metastock.com/BigTrendsA. You can also give us a call. We do have sales guys here right now. You can call them if you have questions, something that you weren't quite sure about, or you just want to talk to somebody. David is the guy that's working right now. He's very friendly. Give him a call at 800-882-3040. If you're international, you can call us on our international number, or you can visit us online at metastock.com/saleschat. And so that's what I have to say about that. I don't see any more questions other than Charles for the upgrade pricing. Thank you for using Charles, the BigTrend Toolkit, Charles. What you'll do is you'll call us up and they'll figure out what version you have and what your price is. So just give us a call. Or so that's 800-882-3040, or visit us online at metastock.com/saleschat. One last thing, I want to thank Price for all of the work he's done with me over the years. His presentation tonight, and just being one of my favorite gurus in the market. I've learned a lot from you, Price, and I really appreciate it. Also wanted to thank you for coming, spending a bit of time with us. It was good to see you here, and I hope to see you at the next one. So with that, I'm going to go pack for Europe, actually. I've got a business trip. So if you need anything, just let us know. And thank you for using MetaStock. Appreciate it.